Okay, now have a look on March 17, question number 4. Right now, I will going to teach you how to answer the question. Alright, question 4A, an auditor's report consists of few parts, which include explanation regarding the management responsibility, the auditor's responsibility, and the auditor's opinion. The types of auditor's opinion that should be issued on the financial statement of an entity vary depending on the nature of finding discovered by the auditor. Alright, required. So these are the things that you have to do. A, okay, have a look. Explain the importance of the auditor's responsibility paragraph in the auditor's report. They ask you to state the auditor's responsibility paragraph. So as in our note before, so we have the items that you should list in the audit report. So what is actually the responsibilities of the auditors? Alright, so alright, the responsibility is to prevent misunderstanding. Alright, number one, to prevent misunderstanding. Alright, regarding the scope of work. Scope of work. Alright, okay. So here, to prevent misunderstanding, scope of work performed by the auditor or the inherent limitation of the audit procedure. So it means that here you must state, it should clearly define the auditor's responsibility. Alright, B, discuss two main circumstances where auditor may issue a qualified report. Okay, may issue a qualified opinion. So here, as in our explanation before, so qualified opinion is come from the two situation, which is disagreement of management. Alright, disagreement with management, and the other one is scope limitation. Okay, so this is the two situation where the auditor may issue a qualified opinion. So now you have to explain disagreement of management. It means that here what the management do in the financial statement is actually you as the auditor disagreed what they did. Scope limitation means that you are unable to perform your job because of the limitation. Limitation may be by the client or maybe by the situation which is not by the client. Alright, C, one of audit partners, Nadia and Association Chartered Accountant, has just completed the financial statement of audit of statement audit of few need audit clients. In each of the following circumstances, so they ask us to justify the type of the auditor's report. Okay, have a look on number 1. Alright, High-Tech Berhad adopts a fully computerized system and does not maintain the hard copy. So everything is based on the computerized computer. Most of its accounting record and support documents, due to unexpected failure of its antivirus and malware program, so most of the accounting related data were destroyed, and the company failed to retrieve the backup data from its disaster from the recovery center. So it means that everything is lost because of the virus, and they are unable to get all the backup data. So here the auditor was unable to perform the most audit procedures on the financial statement. So what do you think? So this is falls under what category? Is that uncertainty? Is that scope limitation? Or is that disagreement with management? Now you are unable to perform your job. So if you are unable to perform your job, of course it falls under scope limitation. So scope limitation. All right. Now, let me ask you, if this one, can you identify whether this is material, not pervasive, or material and pervasive? And of course, this is material. Why material? You are unable to check anything. Material item, immaterial item. Is that pervasive? Yes or no? Yes, because it's going to affect the whole financial statement. So scope limitation, material, and pervasive. So what kind of audit report that you have to come out? So this is the scope limitation, and this is material and pervasive. So this is disclaimer. All right, disclaimer opinion. Okay, so you have to give number one, what opinion and the reason why you say so. All right, so we finish number one. Now we move on to number two. Information in the financial statement of Bumi Berhad was materially misstated. So we already get the keyword. This is material. For instance, contingent liability was not disclosed. All right, was not disclosed. Provisions were not provided. Assets were significantly overstated. Management refused to rectify the errors. Okay, due to instruction from the top management. So they is actually the one to rectify the errors, the one to make a correction. So it means that here it falls under category of disagreement of management. Why disagreement of management? They do not would like to make a correction. So this is a disagreement. Disagreement. Why disagreement? Here they refuse to rectify. Disagreement with management. Alright, is that material? So can we find the item was not disclosed? And alright, materially, can you see the word over here? Materially misstated. Alright, so here materially misstated. Materially. Alright, the question is it material? Yes, the answer is yes, it's stated material. Is that pervasive? Okay, is that is going to affect the whole financial statement or not affect the whole financial statement? Alright, and the answer is yes, it's going to affect the whole financial statement, material and pervasive. So what kind of opinion? If this is disagreement with management and is material and pervasive, and this is adverse opinion. Now we move on to the third one. Okay, during the audit, the auditor had highlighted numerous instances of misstatement in the financial statement of Malacca Berhad to the top management. However, the findings were immediately rectified. Okay, so they say something, alright, to the management. But what did the management do? They rectify and make correction. And then the final copy of the financial statement will adhere to the requirement of the reporting standard. After they do the correction, rectify and everything, so everything is in accordance with the reporting standard. So it means that, so everything is good, so this is a clean report. So if this is the clean report, so this is what we call unqualified opinion. Or unmodified. The same thing, unqualified or unmodified opinion. Okay. Right now we move on to number 4. Right. Okay. The financial statement of Amanah Berhad reflect true and fair view. So reflect true and fair view of the company's financial position and performance. Reflect true and fair view. So it shows that the financial statement shows true and fair view. However, the company's weak financial position, as evidenced by the numerous lawsuits taken by the financial institution and creditors, cast significant doubt on the company's ability to operate as a going concern entity in the foreseeable future. The financial statement shows that the true and fair view, but the auditor doubt that the company are able to operate in the future. So the auditor believed that the matter should be specifically highlighted to the shareholder. So it means that here the auditor is satisfied. So this is a clean report. Okay. But he believed that he should specifically highlight it. Okay. He would like to highlight it. Okay, in terms of what? Uncertainty of going concern. So it means that here the auditor is satisfied. So what kind of opinion here? So this is emphasis of matter. Alright. Our last question, number 5. The financial statement of Alam Manufacturing Sdn Bhd reported a profit before tax, right? So 1.2 million, which reflect true and fair view of the company's financial position. Okay, so the financial performance and cash flow except the omission, all right, accounting for the provision of damages for the 20,000. All right, profit before tax is actually 1.2 million. Okay, the management refused to rectify the finding highlighted by the auditor. So it means that here, profit before tax is 1.2 million. It reflects true and fair view. And then the financial performance and cash flow except omission. Okay, so omission of 30,000 related with what? Provision for damages. Alright, so what condition in this situation? Okay, so this is the disagreement. Why? You are not disagree with the 20k. Okay, okay, disagreement. Alright, so do you think that this is pervasive? Is that going to affect the whole financial statement or only affected on the 20k? Okay, and of course it's stated here which reflect the true and fair view. So everything shows true and fair view except you are not satisfied with the 20,000. So this is the disagreement with management, but this is not pervasive. Why not pervasive? Because it's not going to affect the whole financial statement. It's only a certain part. So this is what you are going to say here. This is the qualified opinion. Okay, for the qualified opinion, it can come from two situations. Number one is just like the question here, disagreement with management. Number two is scope limitation. The figure is material, but then it's not pervasive. So it means that it's not going to affect the full financial statement. Hopefully this one will help you to answer the final exam question.